Hello, my people. Welcome again to another session where in this session we're going to talk on the principles for profitability. So, what do you need to do as a trader for you to be successful in trading? This is what we're going to cover. And in this video, we'll talk on two principles to enable you as a trader to make money in forex markets. And these principles are the first principle, I love to call it a distance principle. One thing you need to know as a trader, for you to make money, you need to do two things. And those things are buying and selling. So what do I do when I want to buy? And what do I do when I want to sell? And how can I make money from that? That's what is important. For one to make money when buying on the financial markets, you need to, let's say the market is here. So when the market is in point A, let's say this point, I call it 1, and I want to go to higher point, higher levels, maybe 2, 3, 4. Whenever I'm in point 1 and I think the market will go to point 7 or point 8, I mean going up, I have to buy. So whenever I buy and the market goes up, that means I'll make money. That means for me to be successful in my trading, whenever the market moves going upward, I need to take a position of buying. So the longer the distance the market moves, the more money I make. Same applies to selling. So whenever I'm in the top of the market, let's say I'm at point 10 and I want to go down to point 8 and 4 and 3 and 1, what I need to do is to sell. So whenever I'm at point 10 and I put my sell at point 10 and the market goes down to point 7, that means I'm making money. So the distance principle is the longer the distance the market moves, the huge the profit I make, and vice versa. Whenever I take a position, maybe a buy, and the market goes down instead of going up, that means the longer the distance the market goes against my direction, the huge the loss I'll get. So the distance principle is all about the longer the distance the market moves on my favor, that means I'll make huge profits, and vice versa. The bigger the distance the market moves against my favor, that means I'll make a loss. So that's, as you can see, currently speaking on distance principles. So let's go to the markets and try to put a position. Let's say we take a trade on this German 30 or German 40 index, and let's use a good lot size like 10 lot size. So after using a 10 lot size, we decided to buy. So after buying, as you can see, we are currently on what? On a loss. And whenever you buy, the market has to go above the point you bought. So going back to my markets, let's use a 1 minute time frame. The market, as you can see, are currently, we bought on this area here of 280. And now the markets are above that area. So as we bought, it means we'll be in profit, because whenever you buy, the market has to go above for you to make profit. So as you can see, currently we are on 40 something profits. So the main knowledge on or concept for you to guys to know on distance principle is the more the market goes up, like we entered here, if the market goes to this area here, we'll make small profit. If it goes more higher, we make a huge profit. So the longer the distance the market moves on the direction of your favor, the more profit you make. So that's how we deal with the distance principle. That's it. Stay blessed, signing out. And the second principle is all about the lot size. So the lot size I use, the huge profit I make if the market goes on my direction. And if the market goes against my direction, the huge lot size I use, the huge loss I make. So same applies to vice versa. The smaller lot size I use, that means I'll make small profits if the market goes on my direction. And if I use small lot size and the market goes against my direction, that means I'll make a small loss. So these principles are very important for me to make money on trading. My friends, trading is that simple. You just need to know and understand those principles and apply them properly. Remember, the first principle is all about the distance. Whenever I take the market and I take a trade, either it's a buy and the market goes on my direction, And that means the longer the distance it goes from where I bought, the more profit I'll make, and vice versa. Same applies to lot size. The huge lot size I use, the huge the profit I make, and vice versa. So for me to be a successful trader, I need to know how to play well with these two principles. Stay blessed and signing out. Hello, my people. As you can see, currently we are speaking on the lot size principle. So the lot size principle is easy. Let's say we go to gold. Now we're in gold, and let's use even this time frame of 4 hours. So we go to our place of taking trades. So we decided to take a sell on gold, and we decided to use a 10 lot size. We went again and put 100 lot size, and we took a sell. We also went again and took one lot size and take a sell. We also go again and take a 0.01 lot size and we take a trade. And we also go here and take a lot size of 0.1 and we take a sell. So as you can see currently, guys, a place where we used a lot size of 0.1, we are in a small profit. Why are we in profit? Because whenever you sell, let's go to 1 minute. Whenever you sell, we sold here, remember, and the market went down. That's why we are in profit. So whenever you sell and the market goes down from a price where you sold, we sold from here and it went down, we'll be in profit. But as you can see, the profit is small compared to these other positions. Like when we use the 100 lot size, we're in a very, very huge loss. Why are we in a huge loss? Because we sold the markets. As you can see, here is where we took a sell for 100 lot size, and the market is currently up. And whenever you sell, the market has to go down from a price you sold for you to make money. So the lot size principle is this way, is that if I use a huge lot size, I'll make a huge profit if the market goes in my direction. That means whenever I sell and the market sells, I'll make money. Whenever I buy and the market goes up, I'll make money. And the huger the lot size, the huger the profit I make, and vice versa. The huger the lot size and the market goes against my direction, that means I will lose more money. So that's a concept for you guys to grasp, that whenever you use a huge lot size, let's say 100, 10, and such kind of lot sizes, that means my exposure to profit will be much higher and my exposure to loss will be much higher. So for you to be well, you need to use a small lot size.